Hello, trader friends. Today we have an amazing episode for you guys. I am so lucky to have JC Parets with us today. JC is one of the most influential minds and voices on financial Twitter, on financial media. He's been regularly featured on Bloomberg, CNBC, Fox Business, Yahoo, Barron's, anywhere you everybody wants to have JC on. And why? Because JC has always been accurate. His calls are spot on. And something I love about JC, when people are calling, saying something weird or stupid, he calls them out. And I love that you call them out, JC, because we need more integrity in the business. And you are an amazing guy. Welcome to the program, JC.
Well, thank you. I appreciate that. And to be clear, I'm not always right, and I'm not calling anyone out in particular. It's more so just responding to the feedback that I'm getting, right? And that's the
I love
beauty
that.
of social media. And I've had a blog for 15 years, and it doesn't matter how rich I get. I can't imagine, seriously, I can't imagine a situation where I have so much money that I wouldn't be going over markets, sharing my ideas, like talking with other smart folks, getting feedback. Like, why wouldn't I do that? It's such valuable information. And I didn't know that going in. Like, I remember, like, when I first started the blog, I'm like, why am I doing this? One day this will come in handy. Seriously, that's what I used to say. I'll share my thoughts, and one day this will come in handy. Boy, did it.
It's a blessing for people to be able, like me, to be able to follow you because, with your insightful mind, with your the way you analyze things and the way you structure trades, it's you give a lot of value to people, and I think people appreciate that. And JC, can you tell us a little bit how you got started in this wonderful business?
Yeah, I mean, listen, this is the age-old question. Like, how did we get here? Like, what happened?
Exactly.
Like, I feel like just yesterday I was playing baseball in Miami, little kid. Like, that's all I wanted to do. I just wanted to play baseball and just, play with my friends and stuff. And so my family came from Cuba in the early '60s. I was born in Miami, and got I was pretty good. I mean, for Miami standards, Miami's good baseball competition. So for Miami
Of
standards,
course.
I was pretty good. But it really helped me get into a much better school up in the Northeast. I went to Fairfield University, right in the ground zero of global hedge funds. So that was conveniently located. So, internship at Merrill Lynch. It was love at first
Oh,
sight for the market for me because my family, they weren't trading. We weren't talking about stocks at the dinner table. Like, we never, not once in my entire upbringing. But a lot of my friends in college, and obviously a lot of my friends ultimately in Wall Street and stuff like that, their parents were in the market. Their parents were financial
right.
advisors. Their parents had a broker. It was just kind of like a common thing. For me, I just didn't grow up that way. So, like, it's like a joke. It's like my parents still don't know what I do.
I something similar happened to me because my dad was mainly, I would call him an industrialist. He was a factory person. He manufactures stuff, goods and services, and but he was never focused on the market. And I got this itch, and I also, I didn't have this background in my family, so we have that in common. And that's great. And JC, I wanted to ask you. I was raised a contrarian, raised by my trader parents as a contrarian, and it's hard to be a contrarian trader because we're always fighting the market, we're always fighting the trends, and recently I've been less of a stubborn trader, and I've been trying to go more with the flow of the market. And I wanted to ask you, where do you see this market now that it hasn't stopped going up and the Magnificent Seven and everything? I would like to get into your mind. How do you see things right now?
Yeah, I mean, listen, things continue to improve, right? Are we
Yeah,
getting more stocks making new highs, or are we seeing fewer stocks making new highs? Are we seeing more sectors and industry groups making new highs, or are we seeing fewer of them? When you go to different countries around the world, are more countries around the world making new highs or fewer? And then you go
right.
to like the new lows list, 3-month lows, 6-month lows, 12-month lows. Are there more
Well,
sectors making new 3 and 6 and 12-month lows or fewer? Are
you're
there
right.
more and more stocks making new 3, 6, 12-month lows or fewer or none at all for that matter, right? So it's more of a weight of the evidence in terms of understanding that this is a market of stocks.
Yep.
It's not just the S&P or the Russell 2000 or the Qs. Like, yes, those are specific indexes that are calculated in very specific ways, many
Yep.
of which are very different from one another. And a lot of investors fail to understand what's driving those indexes. So the Russell 2000 is a great example. Oh, JC, how
Yep.
can we be in a bull market? The Russell 2000 made new lows 2 months ago or whatever. Maybe, but small cap industrials are up 46% off the lows from 22. Small cap
They are.
technologies up almost 30%. Small cap consumer discretionary is up almost 40%. So the most
Wow.
important sectors in the market are dramatically outperforming the large caps, including those magnificent seven that are in that the S&P 500 and some of these and the Dow. Right, a lot these sectors are outperforming those. So the index, as you say, is doing so well, and the Russell 2000 can't keep up. Understand what's in the Russell 2000. 250 regional banks, another 250, 260 biotechnology stocks. So a quarter of the entire Russell 2000 is biotech and regional banks.
Right.
So if
Right.
those industries are not in favor, the Russell 2000 is just going to dramatically underperform every other index because
Definitely.
all those large cap indexes don't have any regional banks or any biotechnology stocks. So there's a
Definitely.
huge difference just in those two sectors alone. It creates a dramatic difference. So people fail to realize the Russell 2000 is dominated by that versus the Qs, that's 50% technology, for
Right.
example. The Dow is more diversified. Contrary to popular belief, the Dow is the most diversified of those large cap indexes. It's only about 17, 18% technology. And you're getting other industry groups like industrials, like the NASDAQ 100, for example, is
Yep.
0% financials, 0%
Exactly.
energy, 0% materials, 0% industrial, 0% real estate. That the Nasdaq 100 is great for what it is. It's a
Yep. Yep.
growth heavy, tech heavy index, and that's fine. Just understand that that's what it is. It's not everything. It's just
No.
that.
No.
It's great, but it's just that. You know.
And do you ever look at valuations? Do valuations mean anything? Do interest rates matter? Because I'm trying to be devil's advocate here because the multiples. This earning season, in my point of view, hasn't been that great. The top line income for companies is a little bit down. Earnings are a little bit down, but the stock market keeps going up. So. Do earnings matter? Do high interest rates matter? I don't know. Maybe I'm losing my mind. Maybe I'm old. Who knows?
Yeah, they matter because the bond market is $130 trillion market. 130 trillion. So just to put things in perspective, the crypto market is 1.5. So
Right.
the crypto market can disappear tomorrow and nobody who matters will care. Doesn't matter at
Definitely.
all. Right?
Yep. Yep.
It's nothing. It's a drop in the
It's
bucket.
nothing. It
It's
is.
nothing. That there's nothing wrong with that. It's a million and a half. That's actually now come back. That's actually a lot for cryptocurrencies. A trillion and a half. I mean, I traded. I'm long, right? It doesn't make it good or bad. It just means it's just to put things in perspective how little it is. All these marijuana stocks, the entire marijuana industry, gone tomorrow, doesn't matter, right? But the bond market, again, just to put things in perspective, the bond market is what actually matters. So anybody with real assets, huge institutions, are deeply tied in the bond market, right? There's no other place to be because they're so massive. So whatever's
Right.
happening in the bond market is going to infiltrate other asset classes, particularly equities. So in 22, in the first half, when the bond market was getting the crap kicked out of it, what do
Yep.
you think?
Yep.
Stocks are going to do well in that market? Bond market's
No.
having a heart
No.
attack. Stocks got crushed,
Yeah.
right? So you're right. So and it's not so much the market. The interest rates up means it's good, or interest rates down means it's good. It's more of stable interest rates, right?
Right.
Letting the market price in what the bond market is doing naturally, slowly on a day-to-day basis versus all at once.
I
That's where the
agree.
problem.
Yeah.
So is it
And I'm
higher rates?
actually I'm happy that interest rates are higher because I think it's healthier to have a little bit of interest rates in the market. It hurts a lot of people. It hurts people who retired, people who depend on those interest rates. They want to buy a life insurance policy. I mean, I think higher interest rates also have a lot of benefits for the normal person out there, who's not on Wall Street.
Yeah, maybe.
Yeah.
It's not my
Now,
area of expertise, so I
I
don't know.
know,
I
I
mean,
know.
it
I'm
sounds right,
mainly
but I have no idea.
yeah, yeah. Mainly I trade indices and I trade bonds. So I those are like my two areas that I focus on. And I'm just surprised that you know just a little rumor or a little news that the interest rates are not going to keep going up or anything, and the stock market just rips up 20% in 6 7 weeks, and it's just amazing to me. So these things matter quite a bit. And JC, I wanted
Well,
to
let's
ask you.
remember it comes back. It comes back to trend, Tony, right?
Yep.
Because yeah, maybe there was good news in whenever that was in November, October, December. I don't know. The Fed guy said something. Good
Right.
news happens in the direction of the trend. The market bottomed 18 months ago. This was in June of 2022. So
Right.
yeah, was there
Right.
good news now that drove stocks even higher? Sure, but they have already been going up for a long time.
Definitely. Definitely. So I don't know if you remember when Trump was president. Every time they had a rumor about tax cuts, the stock market went up 1 or 2% just for the rumor. I mean, and we had the rumors for 8 months, so it just kept going and going and going. So it's crazy. And today you were tweeting that politics may play a role in the stock market, and I want to get your thoughts on that. Do you think does it make a difference if we have a,
I mean,
a,
listen,
a Republican or a Democrat?
I mean, traditionally, no. I don't think it makes that much of a difference. You get like outliers on both sides. Like you can go with the average numbers. There's really not a lot huge sample size. The data suggests that a mixed Congress is best. That probably speaks to what we are talking about the bond market. Maybe less extremes is probably
Right, right.
best for the overall equities market. So in the bond market's not higher or lower, it's kind of a little bit, kind of just stable. So maybe that's why when you look at Congress, maybe it's a similar dynamic happening there. I don't know, but it's probably a pretty good guess there. There's just kind of a lack of extremes on one or the other. Maybe is overall better. It certainly seems that way. I mean,
Yeah.
that's what data
You know,
says, right? So that's fine. It's good enough for
of
me.
course.
But now let's remember, I'm not just going to buy stocks because we have a split Congress, right? That's silly.
No, definitely not. Definitely not. It's just another factor.
Yeah, right.
Yeah, exactly. I tell my kids the thing that worries me the most is inflation, and the only way to protect ourselves and our families is to keep buying assets being stocks, being real estate, being collectibles, art, cryptocurrencies, bond, anything that generates yield or can hold its value, and it's a constant fight to convert earned income into assets to protect ourselves from inflation, and I think that's the
How many
market.
NFTs do you have, Tony? How many
Actually, quite
NFTs
a
do you
bit.
have?
I have a lot of them, actually. Yeah, I do. I have some NFTs. In fact, finally this year that NFTs went
Are
down,
you an NFT
I
whale? Are you officially a whale
no,
NFT?
no, I'm not. No, but I mean, for example, there's these monkeys, the apes, and I'm finally gonna pull the trigger and buy one of those apes and one of the cyberpunks. Like in everything, there's a few little things in everything that could really hold the value. And I think this correction we had in cryptocurrencies already showed us that all the crap goes to shit, and maybe one or two things are left standing. You know, I don't know if when we were chatting before, I don't know if I told you I started one of the first, or maybe the first internet company in Latin America, and all the internet companies went down the hole, and and some of them like Yahoo or Amazon, Mercado Libre survived. So we don't know which one are gonna survive, and so I'm trying to play the long game and see if I hit one out of one of these NFTs or cryptocurrencies. So I like to take some gambles like that. Not with a lot of money, but just hell, I am a true believer in digital assets, and if I'm wrong, I'm wrong. I have this stupid goal of dying with 100 bitcoins in my USB portable drive, so my grandkids can say, "Hey, Grandpa Tony wasn't an idiot. He had 100 bitcoins stashed in this USB drive." So that it's something. It's something.
Ah, nice.
It's a diversification thing for me.
Sure.
Yeah.
For sure. Yeah. So for me, I like to play around with a lot of these things to learn. Right. There's a lot of people that are like, oh, this
Right.
crypto is nonsense and these DeFi protocols, blah blah blah. I'm like, have you even like used them at all? Like, have you like borrowed ETH and like put your borrowed against an NFT or something like that, or lent out? Have you done any of that? No, no, and you haven't gone to like any of the exchanges and like swapped coins because you couldn't do it in your coin, but you haven't done any of this. Nothing. You don't own any NFTs. and you think it's all a sham, but you haven't even got in there and played for your, right?
No,
So it's kind of like, and
right,
then like this, virtual reality stuff. Like I'm not like a video gamer.
right,
I got the
right.
biggest video game in town right here in front of me in the market. So I don't need more video games. So this is how I look at it. But like if you're not experiencing, if you're not playing with the toys, like how are you going to know? So I like to, and even if it's spending money that maybe I shouldn't spend or I don't need to be spending. Like for me, I look at it as like an education, like buying a book and reading it. Yeah, the
Right,
book
right.
costs money. Some are more expensive than others, but
I bought my first Bitcoin when it was $120, and
wow,
I couldn't even. You know where I bought my first Bitcoin? On eBay. That's how dumb I was.
wow.
My second Bitcoin I bought at $550. My third Bitcoin at $5,000. My fourth and fifth Bitcoins at $25,000, and my latest purchase was at $32,000. And so I'm an idiot. I should have bought at $120. Should have bought a lot more, but
You should have bought them
you, you
all, of course. Yeah,
but
now.
it was very hard to buy it. If I would have tried to buy five Bitcoins when it was $100, I don't know if I could have done it, because it was so hard to buy a Bitcoin.
On
Very
eBay.
few
That's
people
so good. So funny.
I said, fuck, I sent this guy the money, $120. I said, if I don't get anything back, I don't care. But I always like to learn new stuff. And I've done
Yeah,
staking,
agreed.
even though I'm old, my kids think I'm the oldest millennial out there, because I've done staking. I've done I bought NFTs. I've traded. I've done a lot of stuff because I want to
Sure.
learn. I have this curiosity to learn, and
Yeah,
I've missed a lot of trends in my life, and I don't want to miss the. I think the next one. Just to finish on the cryptos, I see my kids. They're always on the phone. They want to have their assets on their phone. So it makes sense to me that. Tokenization. I think we're gonna tokenize everything. We're gonna tokenize real estate. We're gonna tokenize stocks. We're going to tokenize everything because people want the convenience of controlling things on their phone and have everything digital. That's why I think these things are going to be successful. That's maybe I'm wrong. I'm wrong all the time, but that's my feeling about digital assets, which
how
is
long before
exciting because
CryptoPunks hit 1 million?
well, who knows? Who knows? It could be, if we keep printing money, $1 million is not going to be much in 5 years. So
Haha,
maybe
fair.
so who knows? It all depends on an asset. How much the asset is worth. When I started trading, I think I told you I lost $400,000 back like 19 years ago, and I could buy a couple of homes in La Jolla, California. Now with $400,000, I cannot even buy a second bathroom in New York in a condo.
Haha.
So it's that it value is relative, I think. So,
Sure.
JC, now let's get our audience excited, and me. I'm so excited to dig deep into your brain. Can you run us on how you create an assumption? What are the things you look at? What are the charts that you're seeing? What are the indicators, so people can get a sense of how your incredible intelligent mind works and how you analyze things?
Yeah, something I learned a long time ago, that I didn't quite execute as well as we're doing at this point, over the years, was that the first thing that we want to do is that we want to identify the type of market environment we're in, what kind of market
Right,
environment we're in, and then decide which tools and strategies are best for that type of market environment, right? So
right,
if you're in an environment where we're in a bull market, more stocks keep going up, everything like that, and you're in a low volatility environment, then you should probably be putting on positions that historically do well in an environment that stocks are trending higher and volatility is low. Why would you incorporate strategies that are good for high volatility environments, for example, in that environment? That doesn't make any sense at all. Why would you be
right,
incorporating strategies that benefit from dramatically falling prices when the
right,
opposite is happening, right? So, and then same thing, like if stocks are in a high volatility environment and we're in a bear market and stocks are falling, then why would you incorporate strategies that are good for low volatility environments if you're not in a low volatility environment? Like, going out, like the VIX is at 50 and people are just going out buying naked calls. Like, why would you do that? Like, that's a terrible strategy for that environment. Like, why would he do that? Like,
I
yeah,
I love it. I love what you're saying because you can be wrong directionally, but if you're correct in the volatility, the way you're trading volatility, you can still make money, and that's so smart. I love what you're saying. The problem with a trader like me that I was trade contrarian, so I do the volatility part correctly, but sometimes I mess up on the directional part. And
again,
what
are you?
in the
And
Mhm.
then also remember, are we in a trending environment or are we in a sideways environment? It doesn't have to be a bear market. It doesn't have to be a bull market. We can be in a messy, rangy mess. That happens all the time, right? All the time. And
Right,
then so think about it like this: if we're in a rangy mess, there are strategies that are great for that, and there are
right,
strategies that are terrible for that, right? Like if you have like a trend following strategy that where you got like one moving average crosses over another moving average, but only like when there's a full moon, or like if you're one of those, like, you know, you're not going to do well in that environment because you're just going to get chopped up, right? Like if you're trying to buy breakouts, breakouts are going to fail. If you're buying breakdowns, they're going to fail. Like you're just in a mess. But if you are selling the wings, if you will, right, and capturing
yeah,
that, that income as volatility then
right,
contracts with the choppiness, right? These people are getting chopped up. They're making donations. It's up to you to clean up and collect that cash, right? But if
definitely,
you're in a
definitely,
trending environment, like for example, if you're in a low volatility trending environment, if you're selling calls, out of the money calls, like you're just gonna keep getting hit. Like that's no good. Like it's just not that kind of environment. Like you're better off low volatility. You're buying a breakout. You can go out 6, 8, 9 months, a year maybe, in out of the money calls that cost you nothing because volatility is so cheap, right? That's a great
right.
strategy for that environment. But if you're in a high volatility environment, those things are going to cost you a fortune. You can be right and you're still going to lose money.
Yeah, one of my Tony trading commandments is never sell a naked call, because I've lost so much money in my life. I literally I've lost at least $1.5 million selling naked calls. So I'm done with selling naked calls. Even in
Wow,
a
that's
high
such
volatility environment, Tony does not sell naked calls. That's it.
it's
I'm
too
done
much
with that.
risk. It's not worth it.
It's not worth it. And they're gonna end up manipulating the market up anyways, or inflation will make assets go up anyway. So
Hold
I'm,
on,
I'm
but
not
then
gonna play that game.
what about naked puts? That's okay.
Naked puts, my core strategies are naked puts, put ratios, something I call a 1-1-1, which is a put spread financed by another put, and the 4-4-1s. It's mainly ratio spreads based on the put side. Although I want to come clean, last year I did a lot of call ratios, which have a naked component at the end, and that worked out because I changed something, JC. I had this rule, Tony plus three. So every time I get an urge to sell a call, I wait one day, and then I wait a second day, and then I wait a third day. And if I still have the urge after the third day, then I do the, but I don't do the naked call. I do the call ratio where I could benefit on a additional up move, and that
We've
little
had this thing.
change,
You'll like this, Tony. We've had this thing where like
yeah,
when the market's just selling off and everyone's
yeah.
bearish and pessimism's just spiking, we just sell naked puts in Berkshire Hathaway. Just collect the income. We've
Of
been doing that for years.
Right, right. Yeah, one of the core strategies that I teach my kids, my kids are young. I teach them to sell 1 year outputs at least 15 to 20% outside of the money to collect income, and that strategy yields them at least one to 1.5% a month. So even though my kids have their own jobs, they're collecting income by selling puts a year out every single month,
It's not
and
bad.
they haven't ever had the need to roll one of those puts out. It's unbelievable. It's unbelievable. And
You let it go to
so
zero. Just let it go to zero.
or no, normally we follow tasty trade commandments, which is at 50%. When we reach 50% of profit, we shut it down and then redeploy, because we're all I'm the way I trade. I also look at return on capital. If in 3 months we already collected 50% of the premium, then it really it doesn't make sense to hold it for 70% of the time for the other
I know it's
50%. What
funny. I agree with you. We used to always do that. But this year we are trying to be more greedy with letting profits run. Like when we
right?
sell 50%, like we used to sell 50% of our calls when they doubled, for example. And
Okay,
rather than just doing that, now we're going to be raising stops. So we're making a conscious attempt to let profits run longer. For example,
And yeah, what do you trade more equities or do you trade more derivatives?
I know what you're
What do
saying
you
on the
use for?
selling side. It's not worth it. I get that. At half, you
Yeah,
cover, you buy it back. Yeah, I'm with you.
yeah, and all it's all risk mitigation. If in order to avoid the gamma risk and vega risk, if you take profits earlier on when you sold volatility, it helps reduce the overall risk of the portfolio. It's just a risk mitigation because I'm much older than you, so I'm more conservative. I'm a more conservative trader, but
Risk
I've been very
mitigation,
very
like no longer selling naked calls. Risk mitigation.
exactly. Or exactly,
Not allowed
or
around here.
or telling my wife the things I know trigger her. That's also risk mitigation. Because,
Risk mitigation. That's right.
we all know how to trigger people that we love, and that's like selling a naked call. So, JC, so you use equities, you use options. What do you use for trading?
Like what? Like brokerage.
Yeah, when you trade, when you place a trade, you place it based on you use equities to trade. Do you use options to trade? What are
Both.
your instruments? Both.
Both. It depends what we're doing. So we have several different strategies. One of the things that I learned over the years as I accumulated wealth was, what diversification really means. And fortunately, I learned this sort of before I had money by watching others make mistakes and reading white papers and talking to smart folks and everything like that. Um, you know, being like, oh, I'm long large caps, I'm long small caps, I'm long international stocks, I'm long, mid cap value or whatever. You're not diversified. You own a whole bunch of stocks, right? Like that's
Right,
not
right.
real diversification. Obviously you and I know that, but just kind of like I feel like that's not
Of
common
course.
knowledge for regular investors. So for me, it's about having multiple strategies, three or four, or five. Like I've seen the research, like three, like four seems to be the sweet spot, but three and five probably work too. Of different strategies
Right,
that are have very low correlations to one another, right?
right.
So like I have real estate and then I have a long only equities long term portfolio. Like those are probably going to move together, right? So I know that I have high exposure. I'm already optimistic about the world. Essentially, if I have real estate and I have long only equity, so I could
Right.
be maybe more uh, incorporate other strategies and some of the other stuff. So we have a strategy where we're selling strangles. We take the top 35 ETFs, the most liquid ETFs. We every morning the one with the highest implied volatility. We sell a
Yep,
strangle
yep,
on that one every single morning. I mean that's we do ETFs versus stocks again, risk mitigation, right? The gaps,
yeah,
the
yeah,
gap risk
yeah,
if you're got a short strangle. So that's one
yeah.
strategy. It just collects income, and it doesn't matter if we're in a super high volatility environment or a low volatility environment, or stocks are up or stocks are down. It's just going to be boring, collecting income. That's it. Just kind of
I
just
mean, would you
what's
be
that?
willing to if I put up the trading platform, can we show the people? I love strangles too. Could we show the people a sample trade just so can people see how your brain works?
Sure, sure. Now understand that we have a whole team that does this. So Sean's the one who's
Of
actually
course.
executing this for me. You know Sean
Okay.
McLaughlin, Chicago Sean.
Yes. Yeah,
Yeah,
Chicago
Sean's
Sean is very famous. He's one of the most strong traders. But for people playing at home, if we follow just Tasty Trade commandments, if we like SPY, in Tasty Trade, I don't know what parameters we use. In Tasty, we normally go at the expected move, which is normally one standard deviation, and we would
sure.
sell, for example, here the 472 put in March, and then we would sell the 504 call, and this trade has a 60 to 65% probability of profit, and that's like a bread and butter strangle. Is this something similar to what you're talking about?
I was trying to share the screen, and then I just
Okay.
lost. I just lost your screen, so I didn't quite see. Walk me through that one more time. Sorry, go ahead.
Sure. So the way I like to trade strangles is I like to trade them at the expected move, and the cool thing about Tasty Trade, they have this they already do all the math for us, and I like to sell the expected move in this case for March, which is our sweet spot, 45 days out. We sell 472 put, which
You
and
know what you're
the
gonna find,
504
Tony?
call.
I get it. I
Yes.
get it. You know what you're going to find, which is hilarious, is that for us, we're not so much interested in the expected move as it is going
Yep.
in and looking at the chart itself and being like, okay, there's with stocks at 40, there's resistance at 45, right, from 3 months ago or whatever. So we're going to sell the 45 calls, right? And then to the downside, if there was former support, right? Because what we're looking for is sort of trades where we can define that, because it's not every stock or chart you could be like there's a well-defined resistance, a well-defined support, and then we'll just sell those wings, right? But what you'll find that
Uh,
I find hilarious is that what you're talking about in the expected move, a lot of times it lines up exactly that, which is really fun.
wow. I love what you're saying because normally I was trained to not even look at the chart of resistance and support levels, and I love that. I'm going to incorporate that into my trading.
But it
So the
doesn't
way
matter.
you
I mean, I don't want to say it doesn't matter. Oftentimes you'll see that they line up.
they line up. I absolutely love what you said, and it's a smart thing. Peter Resnicek from the Shadow Trader. He's a super smart guy, and he uses technical analysis to define the places where he wants to put his wings. And the way
Right,
you
that's
guys
us.
trade
Yeah, same.
is it's you. That's you. You look at the chart, you find support at one level. Hey, I'm going to sell the put there because the stock might find support there. Hey, I see the level over here. I think the stock's going to stop going up. You sell the call, and that's smart. Do you know what expirations you guys like to use for your bread and butter trades?
I mean, when we're
How
collecting
many
in,
days?
yeah, when we're
Yes.
collecting income, 30, 45 days, right?
Wow, that's yep, yep.
Yep.
That's
And then,
great. Yeah.
when we're buying, calls, if volatility is cheap, we'll go out as far out as we can.
Well,
I
why
mean,
not?
we've bought
What?
2 year leaps before, because
Oh my God.
volatility is so depressed, right? Yeah, we'll do it. Why not?
You
Like
know,
if you can buy 2 year leaps, like $10 out of the money for like a buck or two, like, and you're super long term bullish, why not?
My biggest position right now is a long uh, let's essentially it's a long call on TLT that I've been adding and adding and adding. It's a monster, and basically it expires January 2025 and March 2025, and I was raised with death before debit, and for us debit, the way I was trained is debit means extrinsic value. So if I'm going to pay for extrinsic value in a call, I'm always going to try to find something else to pay for that extrinsic value just to give me a little bit more money. So right now my biggest bet for 2024 for Uncle Tony, maybe I'm wrong and my kids won't have any food, but I'm really long on bonds. I'm bullish on bonds because I think interest rates are going to go down, and I don't think the economy is as strong as people think it is. And when the Fed starts cutting, you know, Uncle Tony's going to be minting. I hope something. Who knows? But I trade like you said. When I get to a certain profit, I peel some off, and then it keeps going up. I peel some off. But maybe I'm going to take what you said, and
We're
maybe be
doing
a little
less
more
of that.
patient.
We're doing less of that. Like when we can buy back our spreads for half of what we collected, we
Yes.
unwind, right? Or like if we're selling naked puts, never naked calls. It's funny because I always want to sell naked calls, and Sean always says no, right? It's really funny. It happens all the time. It's actually really funny. So we
Well,
don't. So I
you,
don't. I swear. Isn't that funny?
Sean, I knew he was a great trader. Now I love him even more because
He
you know
never
why
lets me
Sean
sell
doesn't
naked
like.
calls. He never
You
does.
know why? I'll tell you why. Because I bet you he's been hit in the butt. He's been hurt a lot selling naked calls like me. And why? If something, if there's a fire, you put your finger, you get burned. If you
Yes.
do it enough times, that you don't want to do that. So I think I agree 100% with Sean. I think Sean and I would get along really really well together. And besides the strangles, what other strategies do you guys use a lot for your trading?
Yeah, I mean, look, if you want, I can share the screen here. We
Sure.
just put
Yes.
on this
Yeah.
this trade here in Cadence Design Systems is an $80 billion software stock. So, here's just a simple situation. It's a software stock.
Yep.
Software is hot, technology's hot, Nasdaq's making new all-time highs. So in this particular type of market environment, we want to be buying stocks in strong sectors that are going higher, right? That's the strategy that's been working. Like, why would we mess around with that, right? So in this particular
Yep.
situation, it might not be taken off immediately, right? So this is CDNS.
Yep. Yep.
CDNS, your
Cadence.
consolidate, yep, cadence. And listen, we think it definitely goes higher. Maybe about 388 is a long-term target, but we don't need it to do that well. So what we're going to do is we're going to put on a bull call spread. We did that today. That means that we're
Okay.
long. We're long the May 300 calls, right? So we don't need it to
Wow.
necessarily go to 388, but the fact that we have
No. No.
a target like that, I mean, that's a situation. But then we're short the 330 calls, right? So volatility is not that low where we can just go ahead and buy the calls. So we'll help pay for that. And that's it. So if we lose 50%, so we have a 50% stop on this. If we lose 50% of this, here, let me show you. So here's what it looks like.
Mm-hmm. Yep. 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 No, I love it. I love it. You're buying a little slightly out of the money.
Yep.
Yeah. I,
And then
I,
we're
I
help
love
paying for that.
watching
So if
smart people
volatility was
trade.
lower, if
Yep.
volatility was
Yep.
lower, then we would just buy the calls, right, in this
Yep.
particular
Yep.
name. But volatility over the last couple of weeks, you see it. You see IV sort of up a little in a lot of different areas over the last this month,
Yep.
really. Yeah.
Yeah. Yeah. I
Even
saw
with
you
the
went
VIX
100
not
and
that much higher, you see it at the equity level.
right. Yeah. I see that you went, 112 days out and a little bit out of the money. The, you know, if I was you, I would place exactly the same trade. Let me show you the only change I would make,
We're taking
which
profits at
would,
330, by the way. When the stock gets to 330, which is the short call strike, that's where we take our profits.
yeah, you know, it's a, the way I would add to that trade if it was me, I would additionally sell the 275 put to finance that call spread. That would give us a little bit more time because you paid around a $9 debit for
Ten
the
and a
call spread.
quarter. 10 and a quarter.
10 and a quarter. Then if you sell that 275 put on any down move, you could finance and have that call spread on for free, and maybe at 275 you're willing to take the CDNS stock or roll it down. So you guys trade very similar to me, and I just followed my rule that death before debit. If I see a debit, I'm going to try to find a credit somewhere else to finance that trade.
Well, I get it. No, I get it. I totally get it. I mean, listen, I was just with Sean over the last couple of days. We have this thing we call a portfolio accelerator where all the traders on my team get together. It was Louis came in from New Zealand, Alfonso from Venezuela was in town. Sean was in town from Colorado, and we were sharing ideas. And we have like our core clients there that were there analyzing stuff with us, throwing out ideas and different option strategies like selling out of the money puts to help finance certain trades that we don't really do. And we were all walking through it together with Sean. It was fantastic. I love it.
Yep, 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 yep. Uh, I love this trade. Can you share another trade that you guys have done recently that you love?
Yeah, sure. Here, let me
I'm just an addict to watch smart people trade,
ha ha ha.
and
No,
and
I
I
get
think
it.
I think most of our viewers are tasty traders that watch my channel who are trader addicts like me. Oh, wow! I love this one too. This one you also paid. Snow. I love Snow. I think Snow it's a company that's gonna go much higher, and it's a nice aggressive trade. And you're risking $10 to make $20. So I like it. I like it.
So it's sort of um it may be a similar sort of situation. We're in an environment
Yep.
where we want to be buying stocks in uptrends in leading sectors. So I don't want to say that it's the same trade, but like it's not that different,
Right. Right.
But you know what, Tony, there's a reason for that. There's a reason why a couple of trades are similar because these are the types of trades that are working. These are the types of trades that we're looking to put on in this
Right, right,
environment. And then, by the way, when volatility was lower, like for example in November, and yeah, like in November mostly, and even December, volatility was so low we didn't have to sell any out of the money calls. We could just buy the calls, and we were doing a lot more of those trades. But now, even with
right,
the VIX not that far elevated, you're
right,
seeing higher volatility, at least relative to where we've been at the individual stock and ETF level for that matter. So uh, we got to help pay for those calls. Now, we could very well be
definitely.
in an environment in the future soon that volatility is then lower again, maybe, or maybe we're in more of a sideways environment where we're selling strangles more, like we were selling strangles earlier in January. And we're still selling strangles, right? We're still doing that. We're still looking for
Right.
messy charts that aren't moving with indexes that maybe are likely to stay messy. You'll find some like in the materials space, so that's a good place
Right.
to look. But there's
Yep.
messy charts out there for sure.
Wow. Wow. And let me ask you something else. For the entry, so you already know you like snow. You're watching snow. Do you wait for a down move to get into this bullish trade, or once you analyze it, you pull the trigger immediately? How do you guys, what's the trigger to get the to put the trade on?
You know, we know we're not going to always get the best fill. It's just something you have to live with, Tony. Right? Like how
Right.
much do you let that bug you out? Like I mean, seriously, like, do you wait a day or 2 days or 3 days? Like, we take our time, but like throughout a day or so.
Hmm. Yeah. You know what I do? If I want to put 10 on, might put two or three on and start watching it. And if it starts going down, I might add. If it stays there, maybe I'll hold a little bit. And if it starts running up on me, that means my assumption was right. I'll go ahead and pull the trigger on the rest of my position. That's how I approach it. I'm not an all, maybe, and I miss opportunities that way because sometimes I put the trade on and it goes and I said, oh shit. But sometimes I just put a third of it and just to start watching it, and that's how I pull the trigger myself. Yeah,
So here's another one we put on this week.
Taiwan semi.
Yep. So
I love
same thing.
Taiwan semi. Yeah,
Same thing, right? Same story. We like this one because it gapped up above that 110 level. That was
yep,
resistance, so it's a gap and go is what it turns into. Ideally
yep,
we could just buy the calls, but where volatility was, sell the 135s.
yep, yep.
But this was a great example of a trade where the common stock was the better trade. Not so much the better trade, but the easier trade because you had to
The
stop
easier
below
trade.
110 on the common. On the
Right,
options, it's not
right,
that simple. On the options, you're complicating it. There's a maximum profit here versus just
right,
buying, the Taiwan semi. So it doesn't make one trade better than the other. It's just different. Different people do different things for different reasons. So a great example is that me, Sean, and Steve Straza, the three of us
right.
will agree on a stock. We'll all agree, be like, "Yep, let's go. It's going higher." The three of us will do three different things.
Right. I love it. And I wanted to ask you about your risk mitigation, your hedging. What I do, I'll share with you. So let's say I'm bullish on the market. So I would put 70 to 80% of my trades bullish, but then I would find 20% of my trade I trade against Tony. So I trade against myself as a hedging strategy with high probability trades. And I wanted to ask you, how do you guys mitigate risk, or do you do any hedging at all?
Yeah, totally. So, especially if we're naked, right? So, like,
Right.
if we're naked short calls and puts, if at any point you get a close above or below those levels, you unwind the trade right away. Also, position sizing is just an inherent mitigation of risk, no question.
Yep.
Um, Here, I'll just take.
You're hitting all the right notes. Like,
Yeah, the way we mitigate risk, I mean, it's simple is position sizing is really, I mean, that's the biggest component of them all. And then on top of that, you can add additional layers of mitigation. Like, for example, if we're selling a strangle, if at any point it closes at any point outside the wings, you unwind the trade. In the case of these bull call spreads that we're putting on, if at
yep,
any
yep.
point there's kind of like a time component involved, of risk also because of opportunity costs and things like that. So if at any
Right.
point that spread's worth half of what we paid, we'll unwind that right
Right.
away. Um, with let's say we're just naked long calls, you know,
Yep.
you have an inherent risk management. You're a limited partner in that situation, so you can't lose more than what you've got. But
Right.
then, especially Sean is better at this than me, about then mitigating that risk also, so that you don't have to lose 100% of your call premium if you're wrong,
Right.
and you can,
Right.
add an additional layer, right? You see, so it's layer on layer on layer, and you don't like. For me, I tend to more like, I'm in. I already wrote the check. It's gone. It's like a venture capital investment. Like it's gone. So it
Right. Right.
works or
Right.
it
Right. Right.
doesn't. But
Yeah.
Sean adds another layer better than I do, and that's kudos to him.
And now hearing you talk, uh, I've always believed there's a value. I have a group of two friends, Antonio and Armando, who I trade together. And even though we trade very
Do you
differently,
have any?
we all
Do you have any gringo friends?
I do have a lot of gringo friends, and of course, one of my best friends in the world. You know him very well, Mr. Tom Sosnov and Tony Batista. Those are one of my closest, dearest friends in the world. And but we all trade similarly but differently, and there's a big value of trading on a team. Do you find that with your guys, your friends?
No question.
And
Because different people are good at different things or better at different things, right? So there's that element as well. While somebody might be more of an expert in options, another one be more expert at using Excel spreadsheets and building all kinds of algorithms and stuff. I don't know how to do any
yeah,
of that stuff. Like I'm sure I could figure it out, but
right,
it's probably
right,
better that I don't do that. You know what I mean? Like different people
yeah.
are it's just
You know how I get a lot of my assumptions? I call one of my friends and tell him, "Hey, what's your worst trade right now?" Oh, I said, "Oh, I went bullish on, I got bearish on Nvidia," and I look at it and said, "If he's in pain, that's maybe I'm gonna now wait and now I'll go short." I try to fake my
Tony, do
friends.
you think about this? Do you know how much money has been lost by traders selling naked calls in Nvidia? Just think about that.
I know,
Oh,
all the money
oh,
in the world.
just think about that. Ouch.
Now,
Ouch.
now, but the I don't have the chutzpah, the cojones to go long Nvidia at 600. How? What
We
suggestion,
bought
for
it. We got
example?
into five. We got into 500 because it broke out of that base.
But for example, for me, what what can you help me? Let's say trade a stock like that that's already gone up from 200 to 300 to 500, and you're getting it at 500. How can you pull the trigger? I need to improve
Who
myself.
cares? Who cares? What does it matter?
You're right. You're right.
Who cares?
It's yeah, that's a big that's why you probably are making more money than me. I'm very conservative. I'm happy with 1% a month, and you guys are hitting it out of the park, because I'm just so conservative, and it prevents me from pulling the trigger on many trades that I think could work.
The most bullish thing a stock can do is go up.
You're absolutely right. You're absolutely right.
It's just math.
So yeah, because valuations don't matter if people keep buying it. Who cares, right?
Valuations are hilarious.
Now, on the other side, what I want to learn from you, what triggers something in you that changes your mind on the market, or on a sector, or on a stock, that say, "Hey, this thing, I don't like it anymore. I'm going to get out." And could you talk a little bit about that? What are you
So you're
looking
saying
for?
you're saying you're saying trade specific, not overall market.
Yeah, trades. For example, right now, or in the stock market's trending up. What would make JC Perez think, "Hey, caution, Will Smith. This is something I don't like." What would trigger your brain? What are you looking for a trend change?
Well, everybody keeps talking about what's working, but I think
Right.
it's more important, maybe not more important, but just as important, I think, to focus on what's not working, right? And what is
Okay.
not working? Consumer staples as a sector relative to the S&P 500 are making new lows, new lows.
Yep. Yep.
These are defensive areas. Utilities relative to the S&P 500 are making all-time lows.
Yep.
Credit spreads, the spreads between high yield bonds and treasury bonds, as tight
Yep.
as they've been all year. These are the more, look at sovereign spreads, European government spreads,
Yep.
Portugal, Germany, Spain, Germany, France, Germany. Nothing. Nothing. If there is stress in the market, if there's risk out there, you're going to see it in credit. There, because of what we were talking about earlier. It's a
Right.
$130 trillion market. They can't hide it. Like there's
They
nowhere to
can't hide it.
hide. So you're going to see it there. And you just haven't. So, and then finally, the US dollar. And by the way, the US dollar
Uh,
has actually
yep.
stopped going down. So that is warning
Yep.
number one, has been warning number one for sure. Also, the new 52-week highs list peaked 6 weeks ago. So,
Right.
contrary to popular belief, there have been a lot of corrective action over the last 6 weeks. While people are waiting for a correction, we've seen it, right? The new highs list peaked six
Right.
weeks ago, more
Right.
than 6 weeks ago
Right.
now. So
Right.
just
Right. Right.
understand
Right.
that there is corrections taking place. This could just be that, just kind of like a stealth correction. Just let it transpire, and then we continue
Right.
higher. Or maybe that's a heads up that it's going to get worse. What's going to give us that? What's going to lead that to the worst? Relative strength in consumer staples. Relative strength. You're seeing credit spreads starting to widen. Right?
Do
Every
you?
every
Mhm.
major correction starts with a small correction, but not every small correction turns into a major correction.
Right. Do you look at the yield curve inversion? Does
Of
that mean
course.
anything?
Yeah,
Yeah.
I mean, it doesn't mean anything for the stock market.
Right.
It
Right.
means something for the bond market. So if you
Right.
are like, we
Right.
have a lot of large institutions that are trading those curves because they
Right.
have $1 zillion in assets under management. But
Right. Right. Right.
Pepe en la Esquina is not trading the yield curve. Am I
He's
right?
not. He's not. Right. He's
He's not
not. He's
trading the
not.
yield curve.
No. No.
So we look at it because first of all, we look at everything, of course, and the yield curve gives you information on the direction and rate of change of different yields, so we know which bond ETF to trade, whether we're going to be trading zeros or whether we're going to be trading the TLT.
Right.
If we're
Right.
if we're put
Right.
like there's information if you're trading bonds, right? But most people are not. So they're like, well, the yield curve, the pretty lady on the TV said that the old white guy told her that, the last six times and then the this and that. So you're going to short
It,
Nvidia because of that? Like that doesn't make any
no.
sense.
No. No. You're gonna run
So
out of money.
you're going to run
And
out of money real quick.
do you think the magnificent seven stocks are, hiding a little bit of the weakness in the market? And because they're carrying, it's like
No, I think
where
it's
you
the
put.
opposite. I think they're
Okay.
hiding all the strength in the market. because
Wow.
they're getting
That's
because they're getting all the attention and $3 trillion. And meanwhile, these industrial stocks and building materials companies at the mid cap and small cap level, $8 billion, $10 billion, $13 billion building materials companies are ripping. Like just these global industrial companies. Like, let me ask you this: those
yeah.
magnificent seven, what is it? Google, Meta, Apple,
Right.
Microsoft, Amazon, Tesla, whatever.
Yeah.
How many of those stocks trade in the French CAC 50 or the French CAC 40? How many of
No.
them?
Not. No. No.
No.
Probably none.
What
No.
about the German DAX that's making new all-time highs? How many are in that index?
No. No.
And how
No.
many of those Magnificent Seven are in the Nikkei, Japanese Nikkei that's making 33-year
No.
highs?
No.
And what about in
No.
the Brazilian Bovespa? How many of those Magnificent Sevens are in that one?
They're not. No. No. No.
Or
No.
La
But
Bolsa de Lima in Peru. How many of them
nothing.
trade there? None of them, right? So we're
None of
seeing
them.
stocks. By the way, the United States underperformed in 2023. Latin America was the best performing region in 2023, not the United States. So if these
Right. Right.
Magnificent Seven are so great, how come they can't keep up with Latin America
Yeah. The only stock market that's in the crapper is China.
and Africa?
China just and Africa. But
But
yeah,
Africa
for
doesn't even. Yeah, how big is Africa?
I,
Right.
I,
Yes. But
but
just
yeah,
to show you, and like Thailand, you could argue also kind of sucks too. But yes, also kind of doesn't matter. It's really China. Yes.
yes, and what are your thoughts on gold? Because we have a lot of people that follow it that are gold buffs. What's your feeling on gold?
Well, so for me, I'm allowed to make fun of gold bugs because I used to be a gold bug, right? So it's one of those things where like I can make fun of Cubans all I want, right? Like
Right,
it's
right,
just it's
right.
just what it
Yeah,
is.
yeah,
I'm
yeah,
allowed to,
yeah, yeah.
right?
Right,
So
right.
you know, I came up in the 2000s. So it was easy to be a gold bug. All my heroes were gold bugs. I mean, not gold bugs, they just were all bullish gold. So,
Right, right, right.
all the technicians were gold bugs because even during the bull market of like '03 to '07 in equities, which was a great bull market, by the way,
Right, right, right.
gold led the whole way. Gold outperformed stocks the whole time. So even in bull markets, gold can do very well. Now, I saw I saw people get carted off in stretchers. These silver surfers, we used to call them. These silver people were crazy. If you think the Tesla people are crazy, if you think, I mean, you should see the natural gas people. And back in the day, I
Oh
mean,
my
it was
God.
these silver people were out of control, out of control. Silver was going to
Oh
change the
wow.
world, and then they got carted
You
off
know,
on stretchers. And then after
yeah,
such a huge rise, you need digestion. Who knows how long it's
right,
going to take? I guess it's taken 13 years so far and counting. It'll
right.
break
So,
out. I think it breaks out.
but I like what you're saying because don't get married to the name. Look at the product, look at the chart, look at the trend, look at the environment, and if it's gold or TLT or Nvidia, you know, it doesn't matter. You know, people have to be, forget about the ticker. I used to grab, black tape and cover the tape and just, trade it like what I'm seeing. And I that's very smart what you're saying. I like that, JC. And JC, what recommendations would you give the people watching at home that are trader addicts like us? We talk about risk mitigation with size, which is a genius. You talk about trends, following the trend. Don't try to be a hero and shorting Nvidia at all-time highs. We talked about hedging and mitigating risk. Is there something else another tip that you want to share with the audience that could help them in their trading?
Getting the market environment right goes a long way. What they say, don't confuse brains with a bull market. Like you're not that smart. Right? Like that's the whole like theory, right? Like
Right,
so
right, right,
reverse engineer what that means. Like if you're making all this money, it's because you're in a bull market, not because you're smart. Great. So then
right,
in bull markets, you should do that stuff, right? And then in bear markets, don't do that stuff. So identifying the type of market environment we're in is so crucial. And a great way to do that is to actually go and count. Go through all the stocks in the market. Just go one by one. The whole S&P 500. It's not going to take you that long. Go one by one.
no, no,
Are
no,
more of them
yep,
are more of them going up? Are more of them going down? Are more of them going sideways? Which ones are going up the most? Which ones are going up the least? It becomes very obvious when you're like, oh, recession this, recession that, da 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 da. It's like, these trucking stocks keep making new 52-week highs. Why are these European banks keep making new 52-week highs? Doesn't seem like that's so bad out there in Europe, right?
right,
Like there's
right.
go one by one instead of like, oh, well, the Russell 2000, JC, and Magnificent Seven, JC. If you thought like last year, people were telling me only seven stocks were going up. It's like,
Right,
have you even got into count? Have you even like because if you did, it would take you 3 seconds to see that it's not
right,
just
right,
seven;
right, right,
it's like hundreds of
right.
them.
It's
Like,
a hundred,
what are
right,
you
right.
doing? Like, don't come to me with this seven nonsense. Go count, you lazy bastard. Right? So that's my
I
advice.
love it.
Go
I
count.
love it. I love it. I love it. And JC, you founded one of the most successful and valuable companies for any investor trader called Allstar Charts. And it's an amazing company, and a lot of people have benefited so much from you. And for some of our viewers that don't know what it is, could you tell us a little bit about Allstar Charts, why you started it, and what benefits people can get if you join your group?
No, I appreciate that. And it really just started out as a blog. Like I said, back like in 2010, just my other friends had blogs, and I was just kind of like the technical guy. There was like a financial advisor guy, and a VC guy, and a psychology guy, and like everybody had their thing, and I was just the technical guy. So I was like, all right.
Right.
So they're like, JC, we'll build a blog for you. So anyway, so that's how that started, and then come like 2012, I was managing a hedge fund and I was a general partner of the LP and on Fifth Avenue, and I was in my late 20s. It's expensive, right? So,
Oh,
you
oh
know,
God.
so I had some friends of mine that finally convinced me because I was doing all this research because I was the PM of the hedge fund.
Right,
So I'm doing all this
right,
research.
right, right.
So my friends convinced me. I'm like, well, if nobody buys it, I still have to do the work. So I was like, great.
Right.
If we make a few extra bucks, good, because I need it because this is expensive, right?
Of
And
course, of
then
course.
that quickly turned into a multi-million-dollar business. I don't want to say overnight, but pretty quickly. And that's when I started focusing on that. With the idea. So I moved out to California. I was like, let's move out to California. It'll take me 2 years. Let's build out the research company larger. We'll move back to New York, relaunch the fund. But now we have a real business instead of an unfinished product that I'm not even paying attention to. So we moved to
Right.
California, 2 year plan, turned into 5. And we ended up selling the company. We were acquired by an AI company in Colorado a couple of years ago. So since then, I've been managing my own portfolio and the wealth that I've accumulated through the growth of the company, of course. And guys
Right,
like
right.
Sean manages my, we call it paid to play, because if we're going to be here, we might as well get paid to play. So Sean
You're right.
sells strangles for me every morning. That's one of the strategies. It's my money in that portfolio. So it's one of
Of
the
course, of
strategies that
course.
we incorporate, for example. And then I also have
Yeah.
NFTs and I'm staking and I invest in venture capital and I have my own long short portfolio. And then we have our long portfolios and then we have our retirement accounts and then we have our real estate and,
Right.
looking for a little more real estate.
And what sort of information people can get from Allstar Charts? What sort of
So this was
stuff they
a
learn?
this was originally research for hedge funds specifically because that's what we
Wow.
were and that's who a lot
Yep.
a lot of
Yep.
my LPs were hedge funds traders at hedge funds
Wow.
that can't trade on their own because they work for said market wizard and
Right. Right. Right.
so they would give me the money to manage because they couldn't do it themselves, right? So that was
Okay.
their way
Yeah.
to diversify. So anyway, I'm selling a lot of research to these guys that would then use that in their day account,
In
for
the,
work.
right. Right.
So it
Right.
was
Right.
really so what you see today is the original institutional, level research that, because I didn't come from the publishing business. I came from
Right.
traditional Wall Street. So, that what you get it at a retail price and something people can afford, whether you're a trader on your own, whether you're a financial advisor, we've got a ton of hedge fund clients, of course, but it's really for everybody. So it's, stock ideas, all of our scans, the top down macro perspective. So, what type of market environment you're in because not everybody wants to sit there counting charts every night.
Right. Right.
So
Right. Right.
my advice to people, either do it, count, just go count, or find somebody who does and get their notes. And that's
Or
us.
yeah, you know how valuable it is to people have institutional quality level product like I mean the ones you're creating. Forget it, and you guys are one of the smartest people on the markets on Wall Street, and at a and affordable for a retail investor. That's amazing, JC. That's amazing. That's great. JC, I can't thank you enough for coming into the show today. I think everybody got a ton of value because we're here to provide value for people. I thank you so much for coming into the show. I learned a lot myself. It was a thrill to have you on because you're one of the people I follow a lot, I admire, and it was incredible experience for me and for my viewers.
Well, I
And for
appreciate the
every
invite, Tony. Anytime.
and for everybody out there, if you want to grow your pile, follow JC Parets, All Stars Charts. Also follow Uncle Tony. Remember, you gotta risk it to get the biscuit, baby.